Friday, everyone. And for most times, you know that when we talk about Friday, it's Excel Friday. And we got a lot of people who are traveling today for several of our student athletes who are actually going to be representing Truman State for athletic events, which I wish them well. Hope you all do us proud. You all no matter what, but obviously we want you to win as well. I guess if you kind of subscribe to the theory that there's only a finite amount of fun to be had, that means that there's going to be more fun today because there are fewer people here. But I like to think that fun in AIS is not a commodity, that there's plenty of fun to be had if you just reach out and grab it. But hopefully we'll have that today. So first part we're going to talk about is we're going to do some Excel stuff. And this is going to be pretty basic. I think some of these things that we're going to be talking about, you will have been exposed to. We're starting to kind of round the curve. I think after the first exam, we'll be talking more about things that you're not familiar with or not as familiar with. But there's actually a particular reason why I discuss these topics that we're going to talk about today. And one of the things that I think I've talked about this before, and if I've said this, first of all, apologize for any repetition I might have. That's one problem with when you start getting older, is that you start forgetting what you've told people and what you haven't told people. So I always have to preface my stories with, if I already rambled on with this anecdote, you're going to have to deal with it because I'm the instructor. But it does have a valuable purpose. But one of the things that we talk to our partners about and our employers is, what skills do you want students to have? And I think that's an ever-changing list. It definitely is adapting with times. We're starting to see a lot more focus on cybersecurity and artificial intelligence knowledge. And so that's definitely going to be something that you will have to be somewhat proficient in as we move forward. Now, the good news is your instructors should be adapting to that. I'm going to try to force them to adapt. I'm giving a presentation on AI to all the School of Business and Economics instructors, or sorry, the Department of Business and Economic professors next Wednesday. So you can go to their classes on Thursday. It says, okay, did you learn enough to start using AI tools in the class? And they should be confidently saying yes. All right. But one thing that's been consistent, this has been consistent not just since I've been teaching here, but been consistent since I was a student, is strong Excel skills. And that probably goes without saying since we spent so much time talking about Excel in this course. But one of the reasons that I think Excel is so important is not necessarily because you will only use Excel. I think that we're starting to see a lot of programs that are, a lot of employers and a lot of different areas, different disciplines that are moving into other tools that are going to be used, other computerized tools. But Excel is kind of the jack of all trades tool. It gives you a little bit of knowledge about everything. And having good, strong Excel skills is going to benefit you in other ways. You will see the transition to other tools is going to become very, very, and if not easy, it's going to be very straightforward. It'll be a pretty easy process to move into new tools based on your existing Excel knowledge. Now, of course, that also makes sure that you have to have strong Excel knowledge. I think probably most business, School of Business and Professional Studies students, at least the ones in Department of Business and Economics, the students who are going to come from that are going to be the ones who are going to feel like they've got really strong Excel skills. And you probably should feel that way to some degree already. If not, we'll make a believer out of you. And we'll make a believer out of you by the time this course is over. One thing that I think is starting to kind of replace Excel, or Excel starting to get replaced by, is data visualization. And you've probably heard that term before. Some of you may be familiar with data visualization tools already. But visualization is basically taking information and presenting it in a way that's visually appealing for audiences. And my thoughts about this go back to when I was teaching 221. I occasionally teach 221. I taught it over the summer. But the last time I taught it during a regular period, 221 was 2022, I think, spring of 2022. And the 221 class always had this financial analysis project associated with it, where you had to basically take a company and had to perform a detailed, rigorous, comprehensive financial analysis. And I told my students very specifically, I said, I want you to perform this analysis, but you need to present it in a way that is not rigorous. And I think a lot of students are really struggling with that concept. The idea being is that they need to analyze all of the information, but they shouldn't present all the information. And that's a key aspect of any analysis that you will do, is you will have audiences who will not necessarily ask you for all of the detail that you know, but what is the most important detail. And so that was a big delineation, a big distinction between my groups that did well and the groups that were really struggling on these concepts. Is the groups that did well, they did all the analysis. They said, wow, this is an interesting trend, or wow, this is a number that I didn't expect. And that's what would go in their presentation. Versus groups that did not do well, they would basically perform, they would create common size analysis, they'd create vertical analysis, horizontal analysis, and then all of the numbers that they put together would go into a presentation slide. And I would ask, all right, what are the important numbers from this presentation? And they wouldn't be able to answer that question because they didn't look at the detail, or they looked at every single thing in aggregate, but they didn't look at the specific information and say, what's the important takeaways from this? And if you don't look at that, if you don't know how to dissect that information, you can't present that to an audience. So that's why visualization is so important. And we do have much more powerful visualization tools now than Excel. We've got Tableau and Power BI are two that you will likely be exposed to during your time here at Truman. In fact, I can 100% guarantee you'll be exposed to Power BI because that's actually what we're going to be talking about in Chapter 11 at a very basic level. So Excel is going to kind of be a starting point, but definitely not the only visualization tool you'll have access to. It does provide some interesting abilities, though. And some of these, again, you're going to be familiar with. I expect you to be able to do some of these, and maybe I'll teach you something that you don't know. Again, I don't think there's anything too profound for this, but this is kind of a starting point for how you should think about data presentation to other people or information presentation. So as you can see here, I've got instructor ratings, not at all fictitious, completely and totally accurate instructor ratings. That's not true. For the month of August of 2024. And this is pretty easy to delineate. You can kind of look at the numbers and kind of get some details on it. This is not really a good depiction because we're only talking about 6 instructors. Now, if I was talking about all the instructors at Truman State, we're probably talking about 200-something instructors. So that'd be an interesting piece of information. Now, first of all, we're not going to share that because that's confidential information that's shared between schools. And so that's why I made up numbers, but you can definitely see some interesting trends here. You can see that we've got Dr. Barnes staying at a pretty solid 4. He averages about a 3.5, so it's like it moves between 3 and 4 pretty consistently. Dr. Deers, she's been here for a few years, but students still warm up to her because she teaches higher level classes, so it takes a little while for students to get to know her. So she starts out low. Dr. Ice is pretty consistent. Dr. Caden starts out strong, okay? She's a 9 in that first semester, okay? That first month. Dr. Otero always consistent, and Scotty T, I've now recorded me saying Scotty T. All right, now we're in trouble, okay? He's going to come back to me and sue me because I said his name in public. All right, I'm going to have to go back and edit this video now. Sorry, guys. I'm just going to stop and just... All right, Professor Templeton, all right? Professor Templeton is always very strong and always very consistent. So let's just figure out how would we do the analysis if we were talking about more than 6 instructors. And this is kind of a tool that I use pretty consistently when I visualize data. In fact, I'm going to use a very similar tool when I do my analysis of the first exam and auditing here in a little bit. I'm going to kind of show this breakdowns and trends of grades that were on the first exam. So let's just highlight B1 through C7, okay? And again, I'm not doing anything too profound here. I'm assuming that this would be the first place you go if I asked you to visualize this data. We're going to click on Insert, and we're just going to create a very basic bar chart. I'm going to drop down and create a 2D column bar chart, and it's just going to automatically put it in there. Now, like many things in Excel, this is not very impressive to people who actually know Excel. You'd be like, okay, that took you probably a grand total of 10 seconds. And you're going to say, no, it didn't. It took me 5. Okay. But it's not really impressive, but it is actually meaningful and it does provide some context. And it's especially impressive to people who are not familiar with Excel, people who don't know how easy it is to put something like this together. But it does put the information in context. That being said, we can definitely do better than this. We can definitely do better. So let's go to a little bit more complex data set and see what kind of tools are available to us. So moving on to the 2024 instructor ratings, we've actually got data for all of those instructors, but now for 4 months. And we could look at that data and we could try to actually extrapolate some information. Just looking at the data itself, though, is not very meaningful to us. I mean, it's not a lot of detail, and you could probably figure this out, but it would take you a few minutes to figure it out. Is there a way that we can put this together that can actually be a little bit more meaningful? So let's go ahead and let's talk about 2 different methods. One of these is going to be one that if you've ever taken Dr. Caden's course or you've ever talked to Dr. Caden loves pivot tables, okay? So we're just going to highlight A1 through C25, and then we're going to be under Insert again. We're just going to click on Pivot Table. Now, I posed a theory that Dr. Caden uses pivot tables for all of her decision making, and I'm not exaggerating. So I think for every single decision making, like she goes home and the family's like, "What are we going to do for dinner?" She puts all of the restaurants available in the Kirksville area into a pivot table and tries to do some sort of analysis on it. She's like a big fan of pivot tables. I think they're fine. I don't use them very frequently. I think they're fine, but she's just like the biggest fan of pivot tables. So it would be awful if I didn't teach you all pivot tables so that you can flatter her when you take a class. Okay. Basically started submitting assignments in the form of pivot tables, even if it makes no sense to do so. All right. So pivot table. Now we've already got our range set up, so we don't need to specify that. Let's just go ahead and put this in the existing worksheet, and we're going to say start at location D1. So right there. So this is a way that we can summarize information that's kind of meaningful. We need to specify some detail with respect to this, though. So let's go ahead and say how we're going to set our pivot table. Let's drag down month into columns. Let's do instructor into rows. And we'll pull rating into values. And I'm going to make a small change. I don't know that it's really all that meaningful, but let's just go ahead and do it anyway. See where there's an arrow next to sum of ratings? Let's just go ahead and change that to average. You're going to click on value field settings. And it's going to give you a couple of options. Let's just go ahead and do average. I think that's going to be a more meaningful characteristic. All right. Now we've got some information that actually is a little bit easier to digest. Okay, it's in a tabular format that's a little bit more relevant with respect to trends. So as you can see here, as we're talking about, Dr. Ice and Dr. Otero, Professor Templeton, all very consistent. Okay, Dr. Deers, like I said, it takes some time to warm up to her. She's fairly new, but she finishes strong. Okay, and Dr. Caden starts out strong, and well, anyway, yeah. So you kind of see the trend there. And like I said, Dr. Barnes, pretty consistent 3.5. Okay, which you think I'm being abusive towards Dr. Caden by saying that she finished the struggle again. She still has a much higher average than I do. Okay, so and I think that's pretty consistent for the entire time we've worked together. All right, say Dr. Barnes is great. Dr. Caden has to be one step above great. Curse her. All right, so yeah, obviously I'm teasing. Dr. Caden is wonderful. So just for context, I want to make sure I have this recorded. Okay. If it seems like I'm teasing Dr. Caden, it's because she's tax and I'm audit, okay? And we're mortal enemies. We have to fight each other, all right? We have to fight each other. So I don't want it to sound like I'm being abusive. I really don't like Dr. Caden. I have the highest opinion of Dr. Caden, but stuff like this is necessary. It's required for my position, okay? Required for my occupation. And she wouldn't have it any other way. All right, so yeah, this is kind of nice, and we can actually perform some pretty detailed analysis with tools like this. That being said, I still think we can improve upon this. And I'm going to kind of show you the next step. And this is kind of moving into what we would talk about true visualization. So what we're going to do is instead of getting rid of our pivot table, what I'd like to do is I'd like to just copy this tab that we've got right here. So I'm going to right click on Instructor Rankings 2024. We're going to go up to Move or Copy. And we're just going to create a copy and move it to the end. So all we're doing is we're just going to copy the tab, the entirety of the tab. Okay, and it's going to create a 2024 instructor rankings with the number 2 in there. So once you've created a copy of that tab, let's just go ahead and delete that pivot table. And we're going to replace it with something that, in my opinion, is a little bit more appropriate for what we're now analyzing. I'm not saying that this is superior. What we're about to do is superior to pivot tables. I'm going to say for the data of that type that we've got, I think that what we're about to look at is a little bit more useful. So we're going to use what's called a pivot chart. And so let's just go highlight the same data set, A1 through C25. Then we're going to go to Insert. And over here, we move over to Charts. The far end of Charts, you'll see Pivot Chart. So I want you to just click on that. We've already selected our range. We're going to go ahead and continue to put that in our existing worksheets, starting at D1. And we do need to specify the information again. We need to specify where everything goes. It's going to go in the same sequence as before. Month is going to go into our legend, which is going to be our columns. Structure is going to go into our axis, which is going to be our rows, our axis categories. And then ratings go into values. And I don't think we need to change the sum of rating this time because we're looking at disaggregated data. So there's not really a concern about that. Let's just go ahead, take this neat little graph that we've got. Make this the focus of our analysis. So what we have here is effectively a pivot table in graphical form. What's really nice about tools like this is that it allows us to manipulate information in real time. So if you created a table, and that's true to some degree if you talk about how we would do this in Excel. the Excel reference is going to be referring back to data that's here. So if I change the data itself, then it would actually change this. So if I change Dr. Barnes' rating to 9, it will actually be reflected in the graph. But I'm not talking about actually changing the data, but changing how we look at the data is what's more important here. And this is, again, what's kind of interesting about true visualization tools is that we can adjust how we actually analyze this information. So say, for example, you wanted to compare a particular month of performance instead of looking at all the months together. So we're just going to go over to this filter per month, and we're just going to select August. And you can kind of see we've got that same graph that we had before, but it allows us to look at all the data together. Or what if we want to look at the individual instructor performance? So let's go ahead and look at Professor Templeton's performance. Allows us to do that. And it's nice also because we can look at multiple items. So let's just go ahead and look at the tax professors, Dr. Deers and Dr. Caden, side by side. Ooh, look at that. That's an interesting dichotomy right there. One goes up, one goes down. There we go. All right, all right. Just to be fair, one more we're going to do. I'm going to look at Dr. Barnes and Dr. Caden next side by side. Yeah, and you know, despite all my best efforts, she's still performing it better than I am. So, all right. Anyway, this is pretty basic, pretty straightforward, but I do think that there's some relevance here. I do think that you can actually use tools like this, and more importantly, being able to use tools like this will give you a foothold into actually using more powerful visualization tools. I think the new visualization tools will become increasingly more paramount and important, especially because they overlap with data analysis techniques that already exist. So you actually have a lot of power at your disposal to be able to perform really, really interesting and insightful analysis without actually having to be able to perform rigorous tasks, without having to know a lot of have a big data knowledge with the tools themselves. So it's kind of good to have tools like this available. All right, now we've got some homework we're going to talk about. So this first question, my personal preference, by the way, is that I don't like asking questions like this. I do still ask them on exams simply because they fit the format. But I'm not a big fan of which of the following is not something, because usually the inclination on a multiple choice question to ask questions like this is when you see the prompt, you want to actually have an idea of what it is you're looking for beforehand. By asking a question, say which of the following is not something, then you're just trying to look through all the answers and come up with one that's an outlier. And I don't know that that's as a valuable lesson. That being said, I still, even though I say I don't like questions like this, I still use them occasionally because they do fit certain topic areas. This one's not one of them, I think. I would really have liked if they were going to use this. They actually said which of the following is an activity within the sales and election process, because then you would think, all right, what are the activities? Dr. Barnes talked about 4 of them. So selling products and services. What do you guys think? Is selling involved in sales? Yeah, we're going to say that's probably a good one. Okay, yeah. Billing customers. All right. So assuming that we're in business-to-business environments, are we going to send bills to our customers? Yeah. Remember we talked about the delineation between business to customer and business to business environment. Most of our examples are going to be business to business environment in this course, so billing would be an important one. Managing inventory. If you answered this one and said C, I wouldn't count this one as wrong or wrong in the exam. I would say, all right, this one is not immediately apparent. The answer that the book said is that they said that this was also included in there, but I would say there's an argument for saying this is more part of an inventory process than a revenue process. That being said, inventory is required as part of sales. So again, I would accept this as not being part of the revenue process because intuitively it's not, okay? It's part of the inventory process. But the book is going to actually say, no, that's actually part of the revenue process as well. It's one of the activities. Recording payments for customers. Obviously, if we're billing customers, we also want to get paid. So that's actually going to be part of it. So yes, it's that. So the book says E. I would accept C or E here, which again is one of my pet peeves about the book, is sometimes the questions are not particularly written well. But I do think this is a valuable question nonetheless. Sales and collection process is a point of contact between the firm and which set of external business partners. Now, this one is a little bit more clearly worded and a little bit easier to identify. That being said, it's a really easy question. So another way to ask this question is, all right, who do we primarily sell to? What is the name of that group of entities? What is that name of that group of stakeholders? hopefully everybody is thinking right now, that's customers, Dr. Barnes. And that's a pretty easy application question because we're just talking about B there. All right. I do like this question though. Which of the following sales and collection process activities can result in the creation of an account receivable? This is a question about revenue recognition because remember, in a business-to-business environment, we have two series of transactions. The first set of transactions is the recording of the sale, and in a business-to-business environment, that usually means an account receivable. So what are the two parts of that transaction? That's the recording of the sale, so you debit accounts receivable, credit sales, and then you also record the cost of goods sold. You debit cost of goods sold, credit inventory. All right. That's the first part. The second part is the collection of the accounts receivable, which is where you debit cash and collect accounts receivable. So two separate sets of transactions. This is asking about the first. We're creating accounts receivable, which means that we're recognizing the sale. At what point during the business process, during the revenue process, do we recognize the sale? Well, if you remember, there has to actually be a performance obligation met. This is actually kind of the accounting treatment for it. They actually have to meet the requirements that's recognized for a sale. So think about this from a very simple scenario. When does Taco Bell get to recognize a sale when you go and buy food from there? By the way, I use Taco Bell as a reference for a lot. I hate Taco Bell as a food, okay? Not the flavor, it's more about the fact that it makes me feel bad after I eat it, okay? But I will use Taco Bell as kind of a reference just because I know a lot of students love Taco Bell. It's the perfect college food. But when does Taco Bell get to recognize the revenue? Is it when you place that order? No. So when they give you the order? Yeah, presumably yes. It's not even when you pay for it. It's when they deliver that order, when they've met that obligation to you. That's true for every business environment. When a performance obligation is met, that's when we recognize the transaction. So in this situation, it would be shipping ordered products to the customer. Okay, shipping the ordered products to customer because we have actually met our obligation to provide the good or service to the customer. So B is our answer. By the way, there will be questions on the exam that actually talk about recognition of transactions, okay? And that's not just for revenues. We'll actually talk about the reverse, the mirror of recognition of transactions, like when we recognize a liability in the purchasing process. And since this is an accounting class, this is a really important item to note. So please make sure that you have a very clear understanding and you can kind of pick that out, not just in the narrative descriptions, but also in the diagram descriptions that we're going to talk about in a little bit. All right, question number 8. Which of the following is an example of a business rule implementing an access control? So let's go ahead real quick. First of all, I want to go back to chapter 3 because this is going to come up a little bit later in some questions. And talk about the foundation of business rules. We talked about business rules at a general level in chapter 5, but that was actually saying business rules lead to controls. That was kind of our context for business rules in that chapter. We originally talked about chapter 5 and business rules, or talked about business rules in chapter 3. Man, I hate it. What were the business rules we were talking about? There are 3 types: obligatory, prohibited, and allowed. And so when you hear the term business rules, that should be the first place your mind goes. It's like, all right, what type of business rule am I dealing with? Okay. And what would be the control that would stem from that particular type of business rule? Now, obligatory says something must happen, and then prohibited says something must not happen, and then allowed to say this is a process that is allowed or is enabled within this particular process area. Okay. So coming back to this, we'll refer back to this for some other questions. Now, the good news is this is not necessary for this particular question, but it does talk about business rules. This is actually saying a business rule leads to a control. Specifically, we're leading to an access control. Now, remember we talked about 2 types of IT controls way back when we talked about that. We said that IT, actually, I guess we talked about it on Monday, yeah. IT controls have 2 types, categories. There's general or access controls, and there's application controls. So what party is generally affected by access controls? What group of stakeholders in the organization? Give you a hint, starts with E and rhymes with employees. Actually, I can't think of another word that rhymes with employees. It's employees. Okay, yeah, all right. So it's employees, okay? Those actually dictates what employees are allowed and are not allowed to do, okay? So we're talking about an obligatory business rule over employees. Now, just for context, when we talk about application controls, that actually defines the parameters of the system, what the system does in response, okay? System tracking and performing certain tasks. So let's just go through this. The warehouse containing inventory must be locked when inventory manager is not present, okay? That sounds pretty close to something we're talking about with respect to access, because we don't want employees who do not have access to or do not have the right to access inventory having that access. So I would say A is probably an answer. Users recording collections cannot modify all sales records. So if we're talking about users, we're probably talking about employees. So that B sounds good too. Computer system shall generate an audit trail. What type of control is that? It's not an access control. It's what? There's only one other type, guys. I just talked about it just a second ago. Application control, that's what we're going for. That's the application control, okay? So we got the application control, that's what the computer system's doing. Internal auditors shall be used, okay? That's a business rule itself, but not a control, okay? That's when we talk about internal auditors, that would be the business rule itself. So we come up with E, A, and B are business rules implementing access controls, and that's correct, okay? So if that's the case, we're gonna say E is our correct answer. Moving on, question number 11. All right, some UML diagram analysis. All right, so I'm going to leave the UML diagram up here. We're going to talk about this. Some of these questions should be pretty easy by now. Again, there will be a lot of this on the exam, so get as comfortable as you can with this. If you're not comfortable yet, it means you just have some more work to do. All right, refer to the association marked with number 1 of the preceding diagram. So this one right here. Which of the following is best description of the association? So very first starting point, when you're doing these questions, what I encourage you to do is when you refer to an association, think about both sides of the association. That will give you the clue that you need to answer the questions. So employees can be involved in zero sales or mini sales. Because remember, we start with the class, we move over to the FAR multiplicity, and use that as a determination. Okay, that makes sense because some employees probably are not involved in sales. That's not part of their job. The employees that are, they probably do it many times. Sales involve one employee and only one employee. That's the easy interpretation of those multiplicity directions, because it's actually trying to determine both sides of the association. Either one of those could be viable. Which one's actually depicted in question number 11? Well, it says each employee participates in a minimum of 0 sales for B. What do you guys think? Does that sound consistent with our depiction? Yeah, so B is our answer. All right, again, moving on to 14. Association marked with the number 2. Let's go down to number 2. So that's employees and cash receipts. So employees can be involved in 0 to many cash receipts, but cash receipt involves only one and only one employee. So basically the same relationship we saw with sales. Okay. So what is going to be a depiction there? Each cash receipt is associated with only one employee. C is our answer. Again, important to make sure you understand both sides of them, both sides of the multiplicity, so that you can actually answer the question correctly when you get to it. All right. This one's an interesting one. Question number 17. These are the questions. I will say that I will probably ask you questions of the variety of 11 and 14. But I will also probably ask you questions of the variety of 17, because this is a little bit higher level consideration. So refer to the association marked with the number 3, okay? So we're talking about the relationship between sales and customers. What is the best implementation as the minimum multiplicity next to customers is 0 instead of 1, okay? So we're talking about this multiplicity right here. Currently it's 1 to 1, which basically that means that sales involve one customer and only one customer, which again is intuitive. But this is actually throwing you for a loop. It's saying, what if we change this multiplicity, saying 0 to 1? How do we interpret that? So with sales can involve 0 customers, or can involve a maximum of 1 customers, which, again, we're like, that doesn't make any sense. You can't have a sale without a customer, Dr. Martins. This is ludicrous. This is mad, and you're going to storm out in frustration. I hope you know, okay? But maybe that's where you're at right there. But again, we're saying this is a 0 to 1 multiplicity. What could be a possible interpretation of this? So let's think about the answers. Some customers don't pay. All right. Some customers don't pay. They're called dine and dash. But that's not the situation here, okay? They still engage in a sale. It just means there's no cash receipts. All right. Customers place orders who don't pick up the items. All right. Again, sale is still recorded, but that's not, there's not engaged in the transaction. C is interesting. Some sales are made in cash and customer information is not recorded. So you have a sale, but you don't have any customer detail. Is that consistent with what we would see if this was a 0 to 1 multiplicity? Absolutely, absolutely. We would see a sale with no customer information recorded in the table. It was in our relational database. Does that mean there was no customer? No, it just means that there's no customer information, which is how they'll be represented in the UML diagram. So yeah, that's a pretty challenging one to conceptualize, but I think it's an interesting one to think about, because these don't just exist in a vacuum. You have to be able to interpret how the multiplicities react in different scenarios. So I do like question number 17, so just keep that in mind. I'm not going to ask you exactly question 17, but some derivative of that, something like that, you may have to interpret. All right, question 21, refer to the association with number 5. So we're talking about inventory and sales, okay? Which of the following is best example of a business rule that constrains this association? I really do not like this question because I don't like questions where more than one question is the answer, but they don't clearly dictate that. So the reason I bring this question up is because I think it's interesting to see, can you actually identify why more than one question could be the answer? So the book says the answer is C. But I want to go back to our slide again. And remember, we talked about 3 types of business rules. We talked about obligatory, prohibited, and allowed. All of these are valid types of business rules. They didn't specify which type of business rules listed here. Now, if 21 had said an obligatory business rule that constrains this association, then I think we'd agree. C, sales must include at least one inventory item. That would be the only business rule that makes sense because that's an obligatory business rule. Remember, obligatory says something must happen or something should happen, okay? But it didn't specify obligatory, it just said a business rule. Is it fair to say sales are allowed if they include at least one inventory item? Would that be an allowed business rule? That seems like it'd be reasonable to me, okay? I don't think that's the best interpretation. I think C is a much stronger statement, but I still think that A is a valid answer. So if you answered A, that's fine. If you answered C, that's fine. If you answered both, kudos to you. Pat yourself on the back for thinking outside of the box, okay? This is, again, the type of analysis you need to think. It's not so much, am I trying to identify with the correct answer, but do I understand why certain answers are correct and why certain answers are not, and what the interpretation is. By the way, I will not give you any questions on the exam where there are more than one correct answer, all right? That's just going to be the book that does stuff like that. All right, moving to question 25. It's going to look at association 7. Oh, and we have multiplicities that are blank, or at least question marks. So it says, assume that customers pay for all sales in full at the end of the month. Which of the following is the multiplicity that should be found next to the cash receipts class? Okay, so if it's the multiplicity next to the cash receipts class, we're talking sales have blank cash receipts and a minimum of blank cash receipts and a maximum of blank cash receipts. Okay, so what would our minimum be in this scenario? Is it possible that you could have a sale where a cash receipt's not been received yet? That is certainly possible, okay? We extend credit, so they may not have paid yet, okay? So that first multiplicity, a minimum is 0. Work with me, guys, okay? It's important that we get this conceptual understanding down, okay? So 0, okay? But in this particular scenario, it says that if they're going to pay, they have to pay in full. They have to pay everything all at once. So what is the maximum number of cash receipts we can have for a given sale? 1, okay? Because if a sale is being paid, all of it has to be paid. It can't be paid in chunks. That's the business rule that's basically specifying this multiplicity. Does that mean that every single time we see this association that has to be the case? No, we can see a 0 to many if it specifically says, look, customers can pay in installments. That's the differentiation here. That's why we have that's why this interpretation is so important. It's why we had to clarify if they have to pay it all at one time, that multiplicity has to be 0 to 1. So the answer is C, 0 to 1. That's, again, not for every single diagram we'll see, but it's specific to this diagram, that interpretation. All right, keeping on with this. All right, same question. What should be the multiplicity next to the sales class, okay? So cash receipts have to be involved, or cash receipts are involved with some number of sales or how many sales. Okay, so let's just go ahead and say, if they're receiving cash receipts, is it logical that it has to be associated with the sale? So we're talking about the minimum, first of all, okay? Let's do the interpretation of the minimum. Our customer's going to send you cash when they didn't have it, when they didn't make a purchase from you, when they didn't have a sale. That'd be a nice business model. You just kind of stand at a stand and people say, hey, you're doing a good job and hand you cash, okay? Well, I didn't even do anything. Great. Yeah, kind of what I feel like I do some days. Yeah, but no, that's not the way it works in the real world, okay? You're supposed to generate a sale and then a cash sheet's going to be generated because of that sale. So there has to be at least one sale in order for there to be a cash sheet. Can we agree to that? Minimum of 1. What is the maximum? It's going to have to be either 1 or many, okay? Is it possible that a cash receipt could be made for multiple sales? Could we have multiple invoices that are open and being paid at the same time? Certainly, okay, certainly. So 1 to many is our answer right here. This could be 1 to many. Cash receipts can be associated with a minimum of 1 sale or a maximum of many sales. So that's going to be our answer. Is going to be E. All right. Now moving on to question 27, we have a little bit of derivative here. So we're looking at 7 again. Assume the customers pay for all sales in the month in full during the end of the month, which is an example of a business rule that constrains this association. So remember, our business rules: obligatory, prohibited, and allowed. So let's just go through all of these. Customers are allowed to pay for sales on credit. So we have the word allowed, okay, so that sure sounds like a business rule. Is it a sensible business rule? For a business-to-business environment, we'd assume that customers can be extended credit. So that sure sounds like a reasonable business rule to me. So A is probably our answer, unless it's all of the above. Let's just go ahead and go to B. Customers must pay for sales at the time of the sale. Is there a difference between sales and cash receipts if that's the case? Do we have multiple events? Another question is, okay, if I'm in an environment where customers are required to have pay for their purchase at the time of purchase, do I need to separate out two events? Do I need to have an event for a sale and an event for a cash receipt, or are those the same event? They're the same event, okay? So because we have two events here, that actually says we're not collecting at the time, we don't have to collect at the time of payment. There's a credit option that's being extended. So B is not valid here. Customers prohibited from paying for sales on credit. Again, the separation between sales and cash receipts dictates that there is a credit mechanism in place. So in that case, that's not going to be a reasonable business rule. Customers may delay payment for sale by an approval by a manager. So is this a possible business rule that could be existing? It could be, but again, we're talking about this specific model. We're referring to this UML diagram and saying, is that appropriate? Is there a mechanism in there where there's an agent of a manager saying, okay, customers can actually delay payment on the sale by referring to a manager? I mean, you can make an argument that maybe managers are employees, but that would actually have to be a very specific mechanism for that to be in place, and it probably would be a conceptual or a conceptual structure somewhere around here that relates to both of these. So that's a little bit complicated. I think that's kind of a difficult answer to say that's correct. In lieu of A, I think that's the most correct answer, but I don't think it's the correct answer because A is so much clearly superior. So E is obviously, since we have A as an answer, E is obviously not correct. So an interesting question there. Interesting question. All right, let's move on to our diagrams. So again, these were discussion questions. Hopefully everybody saw in my notes that said I ask you discussion questions instead of problems. And I'm a little bit worried when I do that because I know everybody's gotten in the habit of answering problems. I've now got you in the habit of making sure you answer problems instead of discussion questions. And oh no, I changed the policy. So if you answer the problems, you answered a completely different set of questions. It's okay. The world will not end today. But I do think these questions are interesting because we're talking about basic BPMN models and UML diagrams of restaurants. One of my favorite things to talk about because I love talking about food. So let's just go ahead and do a BPMN for a fast food restaurant, and then we're going to actually do the same model for a traditional restaurant. So just talk very, very basically about what type of activities are going to exist. So you walk into Taco Bell, and they're going to say, "Hi, welcome to Taco Bell." What are the next words out of their mouth? What do you want? No, hopefully it's what you said. Hopefully it's, can I take your order? May I take your order? Okay. So they take the customer order, right? And then once they take your order, usually what do? Again, we're talking about a fast food restaurant, so this is going to be a bit different from our model for the traditional restaurant. What is the next step usually that happens after that? Yeah, you make payments. They say your order total is $5 because we're Taco Bell and everything's less than $5 here. All right. So they take your order, they take your money, and then they assemble your order and they deliver it to you. So 4 activities: they make the order, pay for the order, assemble the order, deliver the order. All right. I'm not going to go say I've got my diagram up, but I'll show that. I'll show it up together here in just a second. Now we're going to compare that. So that's an easy way to assemble a BPMN diagram. Very simple BPMN diagram, 4 activities, all sequential. All right. Is that the way it works in a traditional restaurant? Like when you go to Maxwell's, is that's what happens? Like say, okay, you sit down and say, "Can I take your order?" And you deliver your order there. So that's the first step. Can we agree to that? But what was our second step in the fast food restaurant? Pay for the order? Do you do that at Maxwell's? No, usually. When do you usually pay for a meal if you're at Maxwell's? After, okay. So what you do is they'll take your order, they'll assemble your order, deliver your order, and then you'll pay for the order at the end of the meal. Okay. And you'll say, "That was an exceptional server. I'm going to give them a 20% tip because I was so impressed with their service." Tip your servers, guys. Okay. This is coming from somebody who used to work at a server back in college. All right. So let's just go ahead and put some BPMN diagrams together so we can actually delineate that. So fast food restaurant, customer arrives, take the customer order, take customer payment, assemble the order, give the customer the order. Traditional restaurant, take the customer order, assemble the customer order, serve the customer, and collect the payments. Pretty straightforward, right? All right. Then they actually have a quick question on here. It basically says, how would taking reservations add to the second model? All right. How would taking the reservations add to the second model? So where would the actual activity for taking reservations come up? Well, we've got customers arrives and check out customer order. Can we say it probably is somewhere in between there? All right. So customer shows up, says, "Hey, I have a reservation for 6 p.m. What are you going to do?" Say, "Well, it's actually 12:30 in the afternoon. You're a bit early." Okay. Yeah. So I'm not even wearing a watch. Yeah, that's going to be a problem. So we want to check and make sure that we actually check the reservation and check the time of the reservation. If that's the case, if they actually meet those parameters, then we just follow the traditional model, pretty straightforward. So we just add a few activities as well as an intermediate step for this for the reservation. They check the reservations, say, all right, reservation looks good, and you're out here on the exact time you said you were going to be. All right, so let's go ahead and seat the customer. Then we take the customer order, send it to the kitchen, or prepare the order, deliver the order, take the payment. Okay, that's all there is to it. It's not anything too complicated than that. We just have to think about that intermediate step. Where does it go in our traditional model, and what are the implications of that? Implications are pretty straightforward. We just have a decision point that we have to consider. By the way, if you created a gateway for here, that's absolutely fine too. If I ask you a question like this on the exam and you said gateway, reservation, yes, no, I would accept that as well. This is just kind of a simplified version of a gateway decision. All right. So the next part, question 5, we're dealing with the same topic, but I said create a UML diagram. All right. So what are the first steps in creating a UML diagram? Which, by the way, you need to know this because you're going to be creating UML diagrams on the exam. So you probably should know what are the first steps. What do we need to identify before we can create a UML diagram? Yes, we got to identify the classes, the resources, events, and agents. Okay, so let's do that. All right. So what are going to be? Let's talk about the events because those are the drivers. Okay, what are the events in a restaurant visit? Like customer visit a restaurant. What are the primary events that are going to occur? So can we say there's a sales event? We hope so. If we're not generating sales for our restaurant, we're doing something wrong. Okay. All right. And then in most of our scenarios, there's going to be a separation between the sales transaction and the cash receipts transaction. Now, you can make an argument like I made before that there's not a necessary separation between those two transactions if you're talking about point of sale. And if you actually created a UML diagram with just the sales cash receipts event, I would accept that. Okay. But can we say that cash receipt is a separate transaction area for some of these situations, particularly traditional restaurants? In other words, does the sale take place at the same time as the cash receipt? No, it's a short separation, okay? Like maybe 30 minutes to an hour, you actually take the order and then deliver the order. Once you deliver the order, you have the right to recognize that because you've met your obligation, but you haven't collected cash on that. So we're going to say there's a separation of events. Again, if you create a UML diagram with those of the same event, I would be fine with that because intuitively speaking, there's not a big separation, but there's still a distinction, okay? Still a distinction. All right, we're going to come back to that because there's one or more events I want to possibly talk about. All right, what are the resources in this particular scenario? What are customers purchasing? They're generating sales. What is it? Food. Okay, so whatever's on the menu items, food, beverages, anything that they would purchase from the place. Some of those businesses, like Cracker Barrel, you can actually buy memorabilia for your visit because visiting Cracker Barrel, that's a once-in-a-lifetime experience. All right, so that's opportunity as well. Any other resources that are being exchanged in these transactions? Well, we've got a cash receipt as event, so there's probably one more. I'm hoping everybody's like, this is a stupid question, Dr. Barnes, and I refuse to answer you just because it's so obvious. Not just like, I don't know what resource is involved in a cash receipt. Cash, yes, cash is the resource involved in a cash receipt. Okay. All right, who are agents? We've had our traditional agents all the time. We know what our agents are. First of all, we got the people who are serving the food. What are those called? The employees, okay? The people who are eating the food, those are customers, okay? So we have 2 of each, all right? In one of our scenarios, we talked about another possible event that could have been included. That's our third scenario up here. What was our third scenario? What was unique about that? A reservation, okay? So we could actually talk about reservation as a possible third event as well. But let's do the first scenario. So first of all, in our BPM and diagrams, we actually made a distinction between fast food and our restaurant. Is there going to be a distinction in our UML diagrams between our fast food and our traditional restaurant? Are the resources any different? No, fast food and traditional restaurants use the exact same resources, or at least the same categories of resources, maybe not the exact same resources. It'd be hard to argue that like TK Steakhouse uses the same food as McDonald's down the road, okay? But TK Prime uses the same. That would be really weird if they did, though. That's a really good cost to sales strategy. Anyway, so we're using the same general categories, and the interactions are effectively the same. So for traditional fast food restaurants, guess what? Our UML diagram is the same. Huzzah! All right. So this is actually how we would interpret a UML diagram for this particular item. Our sales and our cash receipts, okay? Our menu items, our food here, is going to be involved in sales, cash receipts. And then again, employees, remember, involved in both sales and cash receipts, and customers are involved in both sales and cash receipts. So not only do you need to depict all of those UML classes, but you need to depict these associations, okay? Now, using this as kind of our basis, and this is a really good basis. This would be a good tool for you to utilize your knowledge. So as you're preparing for the exam, I would use this diagram as one of your preparation diagrams. Hint, hint, okay? How do we modify this diagram to I'm taking our third scenario? Remember, our third scenario is going to be just basically a UML class diagram that adds one more scenario, which is going to be our reservation. We said reservation was what type of class? An event, okay? We said it was an event, okay? So let's go ahead and depict our associations with respect to that event, okay? We know it's an event, so we can put the event like up here, probably up here because it occurs before sales, okay? Just for intuitive analysis. But we can put it up there. What is this event going to be associated with? Will it be associated with employees? Do employees take reservations? Okay, yes, we would assume so. Although AI may replace that responsibility in the future, who knows, okay? But for right now, employees are responsible for taking those reservations. Who sends those reservations in? The customers, okay? So we have associations with both our agents, okay? Can we say the reservations has an association with sales? Yes, because there's probably going to be, if you have a reservation, you're probably eventually going to generate a sale with the organization, okay? So there's probably an association there. Reservations, do they necessarily have a association with menu items? Probably not, or cash, probably not cash receipts. So at least 3 associations we identify. So we're probably looking at a diagram that expands out to something like this. Again, that's all there is to it. Now, it's important to note, this is not a significantly more complex diagram. It looks significantly more complex. Why does it look more significantly more complex? We've added legitimately one more class to the existing diagram. Every single time you add an additional class, you add additional resource, event, or agent, you're responsible for identifying the associations that exist with that new class. That's why this diagram looks so much more complex. It's not. It's legitimately one more item that added in along with 3 more lines and then a whole bunch more multiplicities. That's why it looks so much more gnarly, okay? So keep in mind here that it's very, it can be very challenging, which is why we had that UML nightmare as an example way back in the day. If you start adding more classes, you start adding more associations and a whole lot more multiplicities. So when possible, keep it as simple as you can, okay? And if you do have to add in these items, again, try to make sure that you're diligent as possible to identify all the associations and multiplicities that are necessary. All right, and we wrapped up just in the nick of time. All right, we're back for Monday. We're going to be talking about purchasing, so the flip side of revenue. I'll see you all then.